Is Powell going to disappoint the stock market again tomorrow? You might be asking, Mike, how did you know today the market was going to potentially set a trap? It was very simple. In this morning's analysis video, what did I say about the D as in dog shape profile? I said, whichever way we first break, typically, I said quite often ends up being nothing more than a trap, which we got today, and sent the market going substantially lower. Now we look at the fear and greed index, we are still in neutral territory. We only ticked down 2 ticks for the day. Then we come over and look at the most recent investor sentiment survey, came in very bullish at 51.6. And we're going to see, is this a short-term top in the market? Do we get a multiple day pullback? Or is this a one-off event and the market's getting ready to run to new all-time highs? We come over and look at how the indices fared across the board. The Dow was down 177 points. NASDAQ was down 299 points. S&P 500 was down 50.21 points. Russell 2000 down 1.88. Now we look at advancing issues versus declining. We had 71.3% of issues on the day declining. Then as we come over and look at the sectors across the board, we saw the big laggards out there was technology, consumer cyclicals, basic materials, and communication services. And really, we only had 2 sectors in the green, one being real estate, the second one being financials. Now let's talk about this real quick. Powell's Jackson Hole speeches tend to lift the stock market, but, all right, there's a big but there. When they don't, the drop is a doozy. Now, we come over and we scroll this down a little bit. I want you guys to see. So we had Powell's Jackson Hole back in 2018. The market went up 0.6%. But then in 2019, we dropped by 2.6%. 2020 was basically a non-event, up 0.2. 2021, up 0.9. But then in 2022, down 3.4%. Last year in 2023, up 0.7. So let me know in the comment section down below. Do you guys think Jay Powell is going to sink the market again tomorrow? Or are we gonna do nothing more than continue up from where we're currently at? With the market selling off today, we come over and look at what Harker has to say. Harker says needs more data before deciding on rate cut size. So a lot of people in the market have been pushing the Fed to go ahead and cut by 50 basis points. And a lot of Fed officials are on board with essentially cutting rates, but they don't want to go too fast. Then we look at what Fed Susan Collins says. She warns against self-fulfilling pessimism on the US economy, basically saying that if we keep saying the R word, recession, then we're going to ultimately manifest a recession to actually take hold. Now, I don't know if I necessarily believe that or not. We have a lot of negatives out there that the economy and stock market needs to navigate, very cautiously because things could unwind very, very quick. We come over today, look at the dollar index, and we actually get a little bit of a bullish day out there. This is something we haven't seen in a couple days. Dollar index was up 0.39%. However, for you gold bugs out there, not such a good day. Gold suffering down 29 points, and we still have not completed our ABC pattern up. Now, where this is going to be a problem for me is if gold starts trading down below 24.68, I'm going to be raising my eyebrow a little bit saying, are we about to come all the way down here towards this lower swing point or not? MACD indicator has not rolled over at this moment. Then we couple that with the fact that the VIX today, the VIX was up 7.93%. We look at the VIX out here in the 5-minute chart, and we can basically see from the market open, the VIX was on an upward trajectory. Now, does the VIX continue to gain strength tomorrow? If so, that's probably not going to be very positive out here for stocks. This morning, we had some news as well. We look at the weekly unemployment claims. They came in right in line with expectations, but they were still a little bit hotter than the previous week. Then we look at existing home sales, and they actually had a surprise to the upside at 3.95%. However, let's not forget, tomorrow is going to be a big one out here. This is when Jay Powell is essentially going to be taking the podium at 10 a.m. And then we have new home sales at the same time. But Jay Powell is going to really hold the keys to which direction the market is likely to move. Then in the afternoon, we have another slew of FOMC members speaking as well. Now, we come over and look at some of the technology stocks. We see NVIDIA, big bearish engulfing candle on the way down. We come over and take a look at Microsoft. Yikes. Nasty candle on the way down. We take a look at Google. Google today, also a bearish engulfing candle to the downside. Then we come over and take a look at Tesla, also down 5.65%. And we got to ask ourselves, is this doing nothing more than setting up a lower high? And we're about to go substantially lower. As we come over and look at the small caps, Small caps also getting that bearish engulfing pattern to the downside as well. MACD indicator I've been warning you guys about does not look that strong at this moment. Then as we come over and look at the Dow, we also had a bearish engulfing candle as well. Now the MACD indicator is still crossed to the upside. However, for how long will that hold up? Keep in mind with the indices out here, we have a lot of gaps to the downside. Then as we come over and look at the QQQs, nasty bearish engulfing candle, and it's right near the 78.6 Fibonacci level. Now, I don't know that I'm in this camp yet, but we have the potential for a larger A to B equals C to D pattern that could bring the Qs all the way down to 406. However, before we get ahead of ourselves there, I want to see on this pullback, do we start to form a higher low, or do we come down for equal lows or even down towards that ABC pattern? I'm going to have my eyes on these recent gaps that we've seen in the market on this move up. Now, this morning, I also warned you guys, we were starting to see a roll effect of the MACD indicator on the 4-hour chart. It's not crossed to the downside yet, but we really had a hard time. We basically got a little bit above this volume area on the composite profile. Now we're back down below it. If we start breaking the low from today, watch out. We can go all the way down toward about 461.80. That would fill the first gap, but that's only one of many gaps. Then as we come over and we grab our Fibonacci retracement tool, we measure from swing low all the way up here to the swing high. Notice where the 38% level comes in, the same area that we just talked about on the composite profile, and is very close for that gap to being filled. Now, if we go much deeper, filling the second gap, that comes in right between the 50 and 61.8 fib level. That would also make sense as well. Now, I want to make everybody aware, Apex is having an 80% sale off all their evaluation accounts. And what's special about this sale is you also have 1 day pass, you have $40 resets, but all activation fees for any account size is only $85. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Then as we come over and look at the 1 hour chart, we see we have a bearish alignment of the MACD lines at this moment, but we're almost back down at the 0 line. Is this nothing more than a head fake? And we're getting ready to rally back up. We look over here on the 30-minute chart, the MACD indicator is below the 0 line, but as we look at the MACD indicator, it's showing no signs of firming up at this moment. Now, when we look at the profile, notice what we did today. Big gap up, boom, slam back down. I warn you guys of two things with a D as in dog shape profile. One, whichever way we first break, quite often ends up being nothing more than a trap, and then we get the real move. And then number two, we usually get range expansion. That's exactly what we did. Today's range was the largest day that we've seen in more than a week or so. Big moves to the downside. Then as we come over and look at the futures markets, now we see we're starting to get a little bit of a turn. So now I want to go ahead and pull my Fibonacci retracement from the swing low up here to the swing high. Now the 38% level is going to come in right here about 19,153. And if you look, the 38% retracement is very close towards that point of control. Let's not forget, we still have this high probability target right down here at about 19,424.00. That's last week's value area high where the market closed outside of value and has not come back to test that level yet. Then as we look out here on the daily profiles, notice this was a bloodshed day out here, right? Big move on the way up, only to come giving it all the way back up. We did hit the 20,000 price point today, but I want you guys to also focus. Don't forget, all right? Don't take your eyes off the prize over here. We still have this minus development area on the Qs, and that's anywhere from about 19,280 down to about 19,225. So if you look at this, it's not even in our line of sight yet. But do we start to firm up? Do we go a little bit lower, maybe bounce up a little bit and set up an ABC pattern down towards that price point? We were able to take out this previous point of control at 19,609. Now, when we look at the volume profile levels, notice what we're doing. Right now, it appears we're going to close below value area low, and that sets the stage that either tonight/tomorrow or Monday, we come back and essentially take out that price point. Now, value area low is going to come in at a price point of 19,684.00. The point of control will be up here at 19,906.00. Value area high will be up here at 20,025.00. So it's going to be very simple. All right. If you guys join me during the live stream tonight, you'll probably see me trying to target this area a bit. We want to see if the book map levels confirm, orders around that area, but that will be an area of interest for me. Now, when we come over, look at the SPY, nasty bearish engulfing candle, which yesterday we have the makings of a potential hanging man type of pattern. However, we did not get below that candle, but given the hanging man candle, along with a bearish engulfing candle, now we're combining two different signals, and that could basically open the door that we're going to flush down towards 544.42. That would basically come very close to filling the first gap. Keep in mind, we have several gaps to the downside. Then as we look at the 4-hour chart, MACD indicator trying to roll over here just a bit. And we have this gap, right? One gap, two gap, and we're gonna see, do we come back and fill those gaps? Now, I do wanna focus on some of these high volume areas on the profile as well. 541.78, then down here from about 532.81 to about 529.69. As we look out here on the 1-hour chart, MACD indicator making a quick beeline for the 0 line. Then on the 30-minute chart, we had that D-shaped profile, a false break to the upside. They set the trap, boom, slammed it right back down. And now, is this just nothing more than a one-day event? Do we essentially do a bullish engulfing right back up tomorrow? Because keep in mind, crazier things have happened. It's not uncommon near highs in the market where we get a lot of back and forth before we ultimately decide on the direction. Then as we come over and look at the futures markets real quick, notice we were able to take out both of these point controls we've been talking about, and we really had a hard time sticking above this high volume node on the composite profile. Now, when we look at this, what really has my attention is down here towards a price point of about 55.32. That's going to be that high volume area. Now, are we going to make it there or not? I don't know. Maybe tomorrow Jay Powell spooks the market a little bit more. I don't know. We need to take it one day at a time. Then as we come over and look at the daily profiles, notice what we did today. All right, here's the move up. Boom, slammed it right back down. We had a 82.5 point range on the S&P. Now, unlike the NASDAQ, we are not closing outside of value. We're actually closing within value. So we don't have that volume profile trade that we talked about with the NASDAQ setting up. Now, value area low will come in at 55.83.75. The point of control will come in at 55.90.25, and value area high will come in at 56.33.25. So it's going to be very simple. As long as we're above this value area low, I do want to look for maybe some upside testing in some of the areas I have focused on. One is going to be from this candle wick all the way up here to this candle body. I know it's quite a wide zone, but this is where I'm looking for the market to come up to, act as a magnet, and then we'll see, do we get a rejection back out from that area? That's going to be a key point I most certainly want to stay focused on. Now, if you're sick and tired of your stop losses being hunted, make sure to watch this video right here.